Welcome back to the Accounting Working Group podcast. I'm your host, Stein Smith, and I am thrilled to be joined today by a returning guest, Pat White, who is the CEO and co-founder of Bitwave. Pat, always a pleasure to have you on.
Sean, thank you so much for having me, buddy. This is I feel like we're doing this kind of annually, and it's a delightful way to mark the years. There's terrible ways to mark the years, like how many crypto winners you've been in, and this is a delightful way to mark the years.
Absolutely. That crypto winters, gray hairs coming in,
runs towards 10,000. Yeah, like how many times I predicted a $10,000 price and it hasn't happened. Yeah, that's a good one too.
Love it. And so just off the top, Pat, I mean, obviously it's almost every day or every couple hours, right? There are headlines, breaking developments happening. So just overall, right? What's your current assessment of the health of the marketplace or any sort of direction that is trying to be found right now?
You know, ask me a week ago and I would have been pretty down on everything. I mean, it was just, it was sort of a real, between the FTX collapse and all those kind of things, like it was sort of this real moment of like, I wouldn't say despair or anything because I love crypto, but I mean, it was this thing that were like, it was so frustrating. All of these different events that had happened that were not related to crypto that were moving the crypto needle. You know what I mean? The FTX collapse is a great example where it was just like FTX was not a crypto company. I mean, they were trading crypto, but like it was a company started by a Wall Street, like a Jane Street trader, because he wasn't happy with the number of different derivative options he had for buying crypto, which is just insane. Like, because that's not the whole point of crypto is not to no longer have bizarre derivative options, things like that. And then the collapse of it is like almost inevitable when you think about it that way. So there was this like moment of despair, like, you know, a month ago, where it's just like, Jesus, like, can we just can we stem the bleeding of all these like weird non-crypto things sort of happening? And then you have this moment like the SVB bank run, which is, it just reminds you why you got into it. And it's so easy to forget it. Like, it really is easy to forget that Bitcoin, the first block ever, you know, the message embedded in it was Chancellor on brink of second bank bailout. Like, crypto, like Bitcoin was a direct response to poor monetary policy by banks and this terrible feeling of picking winners from governments and like arbitrary application of rules and all this kind of stuff, that you kind of see that you're like, oh yeah, I remember why I got into this. I remember why I love all this stuff. And so, you know, it was kind of like overnight, I genuinely felt like we went from the darkest winter we'd been in for a while to kind of a renewed bull market. And it's really exciting for me because, and so I know this is like the longest winded answer to like the simplest question ever, but like we spent the week, because we don't bank with SVB, but we bank with other banks that were mentioned as part of like these different lists of banks that might go under next. And we spent the week like figuring out what to do. I mean, we like literally were like, okay, so, you know, what do we do with all of our treasury funds? Like, well, we'll split them up. Should we buy T-bills? Okay, we got to go open a brokerage account. And then at the end of it, we're like, well, you know what's super interesting is like, should we have just converted a lot of this over to USDC? Because that gives you an immediate hedge into T-bills, 7 different banks, you know, different FDIC. And I can only imagine that they're going to go off the rails on figuring out like how to diversify their banking portfolio even more. Like, is there a real world where this is like a second killer app, or like the killer app for stable coins? Is you buy a coin, it takes you 7 seconds to do it, and suddenly you get this enormously diversified banking portfolio of holdings, and you just have to make sure you're keeping your private keys safe. So I'm excited right now. Like, I'm very, very excited about crypto right now. Long story short, long story long.
Love it. No, and you know, I'm of a very similar mind to your, Pat, that really sort of all of these headlines, be it FTX, be it the ongoing issues with other platforms out there, be it Binance or some other players out there, right, don't have to do really with anything blockchain related or anything crypto asset related. it has to do almost every single time. Poor management, no controls, limited governance, no oversight. Even at SVB,
Ugh.
ultimately it was a almost textbook case of a poorly run financial institution who, as depositors wanted all of their money back, everybody got a real crash course in fractional reserve banking.
Well, and
Overnight.
I mean, the other thing that was so surprised, I think the thing that took a lot of people by surprise, besides the bank run, fractional reserve, all that, there's tons of stuff to break down across it.
Yep.
I talk about this a lot because I'm a late millennial. Like, I was born in 1984, and I have never in my life had really a period of inflation. Like, my entire life, with the exception of, I think, 6 months in 1993, I think I went and looked this up at one point, has been a low interest rate world.
Yep.
And there was like this 1 6-month period where under Clinton there was high interest rates, like, but then it went back down. And so it's one of those things, like, it was always very abstract to me. Like, when I would talk about crypto as a inflationary hedge, that was a very abstract thing to say, because I don't know what it means. Like, I never lived through inflation, so how the hell could I know what an inflationary hedge is? It was this sort of like economics concept. But now that we're living through it, like, that's the other thing that happened about SVB, is that they were so overexposed to a low interest rate portfolio that suddenly, like, everyone is now, oh my God, like, we actually have high interest rates. And that percolated into crypto, because it's not just that didn't just cause the bank run at SVB, it didn't just cause solvency issues at SVB. That also then caused a lot of the crypto lending protocols to rethink their business model, because suddenly that 4% that 6 months ago was amazing and the best yield you could possibly imagine is now not a very good yield, is underwater versus T-bills. So it's been a really interesting, like, reckoning of this, what used to be a very abstract concept to me, and suddenly how high interest rates actually affect the real world.
Absolutely. And as somebody who was born in '88, I'm on that same page right there, brother. That obviously, I'd heard stories of high interest rates of 18%, and how Paul Volcker at the Fed had to raise them that high to break inflation. But actually seeing it, and seeing really the dramatic and almost instantaneous impact of those rapid rate increases, only up to rates that aren't, historically speaking, all that high,
right,
has had on TradFi, DeFi, and other crypto operators, has been a real and ultimately painful educational process.
Yep, it's been fascinating, if it weren't for, like, the roller coaster that I just can't get off for some reason.
No, and so, adding on to that, Pat, right? In the face of high inflation, high interest rates, volatility, regulatory crackdowns, what are some of the products and services, either at Bitwave or overall, that you, as a person who is a CEO, hands-on in this space all day, every day, are the most amped for going forward?
Yeah. Well, look, so quick intro to Bitwave, digital asset finance platform. It's the number one crypto accounting platform for businesses using crypto. Like, all we focus on is businesses using crypto. The first and foremost thing that I would say, which it's not really a plug for Bitwave, but if you do this, you need Bitwave, is there has never been a better time to bring digital assets onto your balance sheet. There's never been a better time to go to your board and tell them that you actually need to have a real think about diversifying into non-monetary policy based assets. And I don't think there's ever been a time when the board's going to be more receptive to hearing it since crypto has existed as it is today. So beyond everything else, we'll talk about fun products and really cool things that are happening and all that great stuff. Beyond all of that, like, even for us, like, we're going through our treasury process right now, and we very seriously are going to bring a good chunk of crypto onto the balance sheet, because it's not at all clear where to put our money. It's not all clear where to hold it. Like, there's all these different issues about it. So great time. So first and foremost, great time to bring digital assets onto your balance sheet. even if that's just USDC, and all you're doing is
Mhm.
creating a really interesting hedge across a lot of different banks from that perspective. The second thing is we genuinely are seeing this enormous uptick of payments this year. And I
Mhm.
think that we're finally, so I genuinely believe that we are moving out of the kind of trough of disillusionment for crypto. So if you're familiar with this, like they call these I think it's the Gartner hype cycle, where you kind
Mhm.
of have these different periods of hype in a new technology. And one of those periods, like basically the last period before mainstream adoption, is called the hype of disillusionment, where you basically have a bubble, you have this like really, you have this peak of exuberance that is like using crypto for everything in the entire world, even when it doesn't make sense. That then when that
Mhm.
bubble pops, which kind of has happened over the last couple of years, you then enter this trough of disillusionment where people think crypto is not good for anything, and then something pulls you out of it. And that's what we just saw. And so there is really great reasons to be using crypto. We're seeing that payments is finally picking up, because payments was always where crypto should have been going. Like payments
Mhm.
is such a killer use case for crypto that it's not even funny. This, I can't tell you how much I hate the ACH system in this country for taking 3 days to send money around to my parents or whatever it is. Like it is insane. And even in Europe, where they're slightly better, it's still not great. And so the idea to finally be able to get to real T0 instant settlement of payments for incredibly low fees. So I mean, I think the trick here, of course, is that like for so long we've kind of grinned, and it's one of those things, like we've kind of grinned and bared it for this idea of paying based on percentages of amounts of money you're moving around or that you're paying. And the whole thing from the very beginning has always been insane. Like it's like the difference between flipping 1 bit or 2 bits or 7 bits is there is no difference there. So the idea of
Mhm.
paying a percentage based amount for this is asinine. And crypto has just sort of proved that out. It's like this idea that you are totally segregating the fees that you pay for the action from the amount of money, means that now you are paying instant settlement around the world for 7 cents on Polygon to move $1 billion. Like that's the
Mhm.
dream. That's why we're all here. And there's so much cool stuff that we're starting to see people get serious about invoice loans and different models of looking at your payment history or your bill pay history and turning that into DeFi protocols and then borrowing money against it or routing money around it. Like I am so excited for the explosion of business payments on the blockchain this year and what that means. I just can't get enough of it.
Mhm. No, and I mean, all of those are excellent points there, Pat. And yes, I mean, I follow, quite a few people in this space and folks who are not in this space. And I can definitely tell you that over the last couple of years, it has been a roller coaster. And there are, I won't name names here, Pat, but I know of a handful of, highly influential accounting thought leaders who have been anti blockchain, anti crypto for years. And so I'm also really optimistic, right? Right, that as basically we partied as a economic sector 2020, 21, 22, the hangover started,
Yeah.
and then end of 22, it was the post hangover, which for anybody over the age of 35 knows the post hangover is always worse.
It's
But
always worse, man.
but
I say as
but
I'm heading to Vegas this week for from the
uh
fintech meetup. So you're making me dread my life choices.
I'm just back from AC myself, so I feel
Oh,
you on that.
yeah.
Um, and so anyway, back on topic here. Um, in terms of trying to have a balanced right view here, Pat. Obviously, I'm very optimistic about crypto. Have been, and I've been buying consistently for the last 5.5 years. But in terms of sort of the policy piece of this, I mean, it is no secret to anybody listening that I would say that the over the last 12 to 18 months that
Yeah.
going from that the overall sort of approach here in the US has gone from a passive approach,
Yeah.
not hands off, but passive, to a openly antagonistic one. And so how do you see that sort of shaping or curbing some of that enthusiasm for products and services connected to crypto payments?
Yeah. I mean, look, I am not a deep political thinker about
They
like
don't
how
think too
things
deeply
actually work.
usually, Pat, right? They
It's
don't think too deeply.
Yeah, it's one of these things that just kind of kills me inside, because there's a few things that have been happening that I don't like. I don't like that crypto is becoming a bit partisan.
Mm-hmm.
And I feel like that's the Democrats well, I don't know. You can't really blame either side for it. I mean, they're both,
Mm-hmm.
it's honestly like, Republicans do something and Democrats do the opposite or vice versa. And so there's
Well,
this
yeah.
aspect. And I do kind of blame, for what's worth, I do kind of blame Elizabeth Warren around this, because Elizabeth Warren took an early stance against crypto quite a while ago. That then pushed Republicans to taking the opposite stance, whether they were thinking about it or not. And then, because it's one of these things that, like, I hate that crypto's become partisan. It really, honestly, I always bring up Elizabeth Warren here because I like Elizabeth Warren. Like, I think the Consumer Protection Bureau was a fantastic idea. Like, the financial service industry is not my friend. Like, I'll tell you why. Like, I shall tell you a quick story here about why we do not use SVB. I wouldn't tell this if they were still in business, because I probably during the, well, it still is kind of crazy to me that SVB collapsed, because I've been in startups my entire adult life. And honestly, I have probably been to an SVB event once a month for the last 15 years. I mean, it's just one of those things, like, they're so pervasive in the Valley. They sponsor so many different networking events and groups, and it's incredible that they are now evaporated. So I would never have really said anything bad about them, because I would see someone from SVB like every single week. But now that they're gone, I can say, like, the reason we don't actually use them, and I promise I'll bring this back around to Elizabeth Warren, is the first day. So my last startup, we did a lot of stuff that you're supposed to do as a startup.
Sure.
It's one of those funny things. Like, this startup, I didn't do any of it because I'm a lot smarter. But like, we used an expensive Silicon Valley law firm. We got an SVB account. We did all those things that you're supposed to do as a startup. My first day, so we get the SVB account set up. The very, very first day that we have the account, someone from their side buys us checks, because I guess you pay for checks in their world, which already is super frustrating, but whatever. So they bought checks out of our account. This is like the very first day we had it, before we'd funded it, and they overdrafted our account, buying checks from themselves. And then I get a nasty gram from their banker, from our banker, telling us we'd overdrafted before we'd ever funded this stupid account. And I closed it the next day and have never, like, literally never looked back to it. And I'm like so happy about all of that. So anyways, like, there's a lot of, in my life, I've had a lot of scenarios like that with these overdraft fees. And Elizabeth Warren, like, the work that they did to simplify overdrafts. I mean, there is literally a regressive tax that the financial services industry puts on America, because, like, rich people don't pay overdraft fees. It's something like $9 billion. Someone did the math on Reddit the other day. It was like, it's the best article I read, because someone literally figured out, it was the math on how many dollars per second the financial services industry was taking away from poor people through overdraft fees. It was like $10,000 per second gets stolen from poor people, or like people like who don't have enough money to cover it in overdraft fees. So Elizabeth Warren did amazing work on that. Like, there's awesome stuff to add transparency and laws and rules around that, to then not realize the value that crypto can have, is a huge miss from my perspective, because I would think the consumer, like, crypto is one of the most amazing instruments for financial self-empowerment. There are no overdraft fees in crypto. You can't physically have it. It just doesn't work. You can't do it. And that's amazing. Like, if you are on a fixed income, that's a really good way to live your life. And so I still bear some amount of hope that some of the partisan rhetoric will go away around crypto, and people will realize there are very real use cases to, something like USDC with high diversification of banking and stuff like that, and that we will actually see a little bit more sensibility return to this. And honestly, I blame FTX for all of this. Like, I 100% blame Sam Bankman-Fried for like the world. I think we would have continued with a relatively passive regulatory environment had not there been a $60 billion collapse. And suddenly like all of the regulators like woke up like, oh crap, should I have been looking, like, should you have been like, who should have been watching this, that we just let like a billion, like hundreds, like, tens of billions of dollars evaporate overnight. So all I can say is I really hope that we do get to a more sensible regulatory environment.
Yeah, I would hope so too there, Pat. And all that I'll add there is that, based on everything that I've ever seen, heard, read, talked about, the more hands-on policymakers get in terms of choosing winners and losers, be it companies, be it banks, be it tokenized assets, then the worse off that economic sector does.
Yeah.
Over and over and over. So hopefully, yes, I will echo that point, that hopefully going forward, right, that after the FTX mess gets ultimately sorted out, hopefully, soon for US investors, that as that gets sort of sorted out, worked through and analyzed in a calm, objective manner, hopefully, that after that, then some of those policy bills that had been put forward around stable coins and all the rest could be brought back onto the front burner and actually talked about in a productive way.
Yeah. And like, did you see, this was going around Twitter today, which is the screenshot of the Fed board meeting minutes that showed the dissolution of SVB and then the denial of the Custodia application, which was a fully collateralized one-to-one non-reserve bank doing crypto custodianship on top of banking. They got rejected.
I saw Caitlin Long posting that. Yep.
And it's just, it is incredibly frustrating. And it's one of those, it's when you start feeling like, well, it's honestly like, we all kind of knew this was going to happen. Like, we all knew at some point that like the financial, like the immune system that is the financial systems, the financial services industry's immune system, which really is, Washington in a lot of ways, would start pushing back. And that's a great example of it. Like how it's just so glaringly obvious that, that something is wrong in the way they're thinking about this stuff.
Yeah, absolutely right. And to wrap up our conversation here on a more optimistic note, hopefully, what do you see for the rest of 2023 as we speak? We are wrapping up the first quarter, believe it or not, of 23. What are some of your forecasts, estimates, sort of look aheads?
Yeah, I already talked about payments, so I won't beat that particular dead horse. I think this will be a big year for payments. We're seeing that pick up in our business a lot. Tokenization is gonna be a huge year for tokenization. I'm not going to make any Bitcoin price predictions. I've gotten too many of them wrong. I guess I'll still do it. But I will make some predictions that by the end of the year, you will be able to buy most stocks on the blockchain. I don't know exactly how that's going to look. I don't know what's going to smell like, but I feel relatively confident that like we'll see a huge pickup in tokenization, to the point that if you want to buy Microsoft on the blockchain this year, I think you'll be able to do it. I think there'll actually be a few different companies doing it. There already are some companies poking around it. FTX was doing some stuff there, but I think tokenization is going to really lift off this year, covering everything from real estate to stocks to, you name it, what else is out there in the world. I think we'll see a stable coin that comes out in direct response to SVB, that is a literally hyper-banked stablecoin designed as a hedge to banking failures with like mechanisms built into it. Because it is, honestly, Sean, like I know I'm getting straying a little bit away from the original question, but one thing that was really interesting to me is that I'm not sure anyone had really contemplated USDC taking a haircut. Like that was honestly one of the most interesting parts about the DPEG was
Yep.
I don't even actually know. I like outside of the price depegging, outside of everything else, I actually don't know if anyone had seriously thought about what their mechanism to just deal with it is, because I don't think they have a I don't think USDC even has a rebasing mechanism. But like, let's say that they really never let's say that $3 billion really evaporated. Did you see anything about how they would have dealt with that? Do you have any insight into that?
I didn't see anything that's posted publicly, because I think their whole take on the issue off the very top was that they had full confidence of the recovery of those funds. So, but I can go out here on a limb and say that probably internally, I'm sure that all of the risk management folks at Circle are actively trying to work out how they ultimately would rebalance if they had to. But no, I have not seen anything, heard anything, even anecdotally, as to how they would try to deal with that. Right? Because to your point, the whole question hadn't ever been asked actually.
Yeah, like would they? I mean, like literally, the only thing that makes sense is to do, because it was $3.3 billion out of $150 billion total market cap. So it's something like whatever a 1.5, whatever 2% haircut. So could they have done this thing where they just give every holder a 2% haircut on their USDC? I don't know. So there's stuff like that I think is going to get figured out this year. Like we've taken it for granted, but the transparency means that we actually I can rattle those numbers off the top of my head, and I can very honestly say, like, look at before I put a lot of money into USDC, I actually want to know exactly what that is. And if you guys don't do it, someone else will launch a stable coin that is designed to have high confidence in the face of failing banks and things like that. So I think we'll see I actually think this could be a great year for the stablecoin industry. Like, I know that's a silly thing to say, but like, I actually think that
I don't think so. Yeah,
they're going to figure out some really interesting things. This pointed to a really, really interesting use case for stable coins, and I think it's going to be a great year for stable coins. And I still think this is going to be a great year for DeFi. Like after FTX, I think this is just up and to the right on DeFi. You know, the only thing that's killing me about DeFi, like we've had a few customers that got CFTC notices and had to fire everybody in the US, move their founders over to Portugal, and reincorporate and do an asset sale. Like it kills me. It is literally the dumbest thing I could possibly imagine the US doing. Like there's no reason for someone doing really interesting novel work on blockchain DeFi to abandon the US other than rent seeking from financial services, which is exactly what we don't want. So DeFi is still doing great. I just am so sad about America not wanting to take part in it, I guess. I don't know.
Yeah, no, but I think that either way, right, be it payments, be it stable coins, be it DeFi, be it tokenized assets overall, I do think that as the year plays out, there's going to be a lot to watch.
Yep.
And Pat, it's always a absolute blast having you here on the podcast. I will absolutely have you on again, hopefully sooner than a whole year from now. But Pat White, it was a pleasure.
It is my absolute pleasure, Sean. Thank you for having me. Everyone, you can find us at bitwave.io, or I'm at Pat White on Twitter, though I never tweet anyway. The Twitter's too weird for me anymore. It's gone a little bit off the deep end. But absolute, Sean, thank you so much for having me, man. I really appreciate it.
Absolutely, Bet. Thank you again.